Have you ever wondered how your money can work for you? Let's delve into the world of investing. Investing, stripped down to its bare essentials, is the act of committing money or resources to an endeavor, with the hope of generating a profit or gaining an advantage. It's a game of strategy, where you make your money work for you, instead of the other way around. Imagine a seed that you plant in the soil. You water it, provide it with sunlight, and over time, it grows into a flourishing tree. That's what investing is like. You sow the seeds of your hard-earned money into investments, nurture them with time, and eventually they bear the fruits of profit. It's about making your money grow faster than inflation can erode its purchasing power. But investing is not a get-rich-quick scheme. It's a journey, a process that requires patience, knowledge, and a keen understanding of the financial landscape. It's about recognizing opportunities and making informed decisions. It's about understanding risk and reward and balancing them in a way that aligns with your financial goals and risk tolerance. Investing is a powerful tool for wealth creation. It's the key that can unlock the door to financial freedom and prosperity. It's the vehicle that can drive you towards your financial goals, whether they are buying a home, starting a business, or securing a comfortable retirement. But the journey of investing is not a solitary one. It's a journey that we can embark on together. We will explore the different types of investments, unravel the magic of compound interest, and learn how to build a diversified portfolio. We'll understand how to navigate the market's ups and downs and learn to invest for the long term. So, are you ready to embark on this exciting journey? Are you ready to see how your money can grow and work for you? Investing is a journey that can lead to financial freedom and prosperity. So let's get started and let's make your money work for you. So, you're intrigued about investing, but where should you put your money? Well, there are several types of investments you can consider, each with its own unique characteristics and risk profiles. Let's start with stocks. When you buy a share of stock, you're essentially buying a small piece of a company. This makes you a shareholder, giving you a claim on the company's assets and earnings. Stocks can provide considerable returns, but they come with a higher level of volatility. Next up, we have bonds. Think of bonds as loans that you make to governments, corporations, or other entities. In return for your investment, you receive regular interest payments and eventually the return of the bond's face value when it matures. Bonds are typically less risky than stocks and can provide a steady income stream. Another popular investment option is real estate. This involves buying properties with the intent of generating rental income or selling them for a profit. Real estate can be a profitable long-term investment, but it requires careful management and consideration of market conditions. Then there are mutual funds. These are investment vehicles that pool money from multiple investors to invest in a diverse portfolio of stocks, bonds, or other assets. Mutual funds offer the advantage of diversification and professional management, though they do come with associated fees. Last but not least, we have exchange-traded funds, or ETFs. They're similar to mutual funds, but they trade like stocks on an exchange. ETFs offer both diversification and flexibility, making them an attractive option for many investors. Now, it's important to remember that each of these investment types comes with its own potential benefits and risks. Your choice will largely depend on your financial goals, your risk tolerance, and your investment horizon. So take the time to understand each option and consider seeking advice from a financial professional if you're unsure. Remember, investing is not a one-size-fits-all endeavor. It's a journey that should be tailored to your unique circumstances and goals. Each investment type has its own potential benefits and risks. Your choice depends on your financial goals and risk tolerance. So, choose wisely and happy investing. Now let's delve into one of the most powerful concepts in investing: compound interest. This is not just an abstract mathematical concept, but a potent financial tool that can significantly accelerate the growth of your investments over time. So, what exactly is compound interest? Simply put, it's the process where your initial investment earns interest, and then those earnings also generate interest. It's like a snowball rolling down a hill, growing bigger and faster with each passing moment. Let's illustrate this with an example. Imagine you invest $1,000 at an annual interest rate of 5%. In the first year, you'd earn $50 in interest. That seems pretty straightforward, right? But here's where the magic of compounding comes in. In the second year, you're not just earning interest on your initial $1,000. No, you're earning interest on the total amount of $1,050. That's your original investment plus the interest from the first year. So your interest for the second year would be $52.50, not just the original 50. It might seem like a small difference now, but remember our snowball rolling down the hill. Over time, these small amounts start to add up and your wealth begins to grow at an ever-increasing rate. And the longer you leave your money invested, the more time it has to compound, and the larger that snowball becomes. That's why starting to invest early can have such a significant impact on the final size of your investment. It gives your money more time to work its magic, more time to roll down that hill, gathering size and speed with every passing year. So there you have it. Compound interest, the secret weapon of the savvy investor. It's a simple concept, but it has the power to transform your financial future, turning small, regular investments into a substantial nest egg. The magic of compound interest is truly a game changer in the world of investing. Diversification is a term often thrown around in investing circles. But what does it mean? Well, think of it as not putting all your eggs in one basket. It's a risk management strategy that involves spreading your investments across various asset classes, like a smorgasbord of financial opportunities. Diversification operates under the premise that different investments will yield different returns at different times. For instance, when the stock market takes a dip, your bonds might be performing well, cushioning the blow. It's about balance and not being overly reliant on a single asset class. A diversified portfolio could include a mix of stocks, bonds, real estate, and perhaps even a sprinkle of alternative investments, like commodities or cryptocurrency. The exact mix depends on your individual circumstances, financial goals, and risk tolerance. It's like creating a personalized investment cocktail, tailored to your taste and financial appetite. But why is diversification so important? Well, it's all about managing risk and potential returns. A diversified portfolio can help smooth out the bumpy ride that can be the stock market, reducing the potential for dramatic losses. It's like having a safety net, protecting you from the financial high wire of investing. And diversification isn't just about different types of investments. It's also about geographical diversification, investing in different markets around the world. This can further spread risk as different economies often perform differently at different times. However, keep in mind that diversification isn't a one-size-fits-all strategy. It's a dynamic process that requires regular review and adjustment based on changes in the market and your financial goals. And remember, while diversification can help reduce risk, it doesn't completely eliminate it. There's always a degree of risk when it comes to investing. In conclusion, building a diversified portfolio is much like creating a well-balanced meal. You want a variety of nutrients to nourish your financial health. And just as you wouldn't eat only one type of food for every meal, you shouldn't rely on one type of investment to meet all your financial needs. A well-diversified portfolio can be your best defense against market volatility. Investing isn't about getting rich quick. It's about growing wealth over a long period. This is a fundamental truth that underpins the art of investing. It's not a lottery ticket or a get-rich-quick scheme. Instead, it's a deliberate, methodical approach to steadily building wealth over time. Now, you may have heard about market fluctuations, those short-term ups and downs that can make the financial news headlines. These fluctuations are a common part of the investing journey. Markets move in cycles, and it's perfectly normal for there to be periods of both growth and decline. But here's the thing to remember: despite these short-term fluctuations, historical data shows that over the long term, investments tend to grow in value. That's right, patience has a way of paying off in the world of investing. Think of it as a garden. You plant the seeds now, and with time, they grow into robust plants. You wouldn't plant a seed today and expect a fully grown tree tomorrow, right? Similarly, your investments need time to mature and flourish. But time alone isn't enough. Investing also requires discipline. Discipline to stay the course even when the market gets turbulent. Discipline to stick to your investment plan even when others are panicking. Discipline to continue investing regularly even when it seems like your portfolio isn't growing as fast as you'd like. And let's not forget about the impact of compound interest. As we discussed earlier, the longer your money is invested, the more time it has to compound and grow. And this growth can be exponential over the long term. So if you're feeling impatient or anxious about your investments, take a deep breath. Remember why you started investing in the first place. Keep your eyes on your long-term goals, not the short-term noise. And always remember this: in the world of investing, time is a powerful ally. The sooner you start investing, the longer your money has to grow. So don't wait for the perfect time to invest. The perfect time is now. Remember, investing is a marathon, not a sprint. Patience and discipline are your allies on this journey.